So Trump crushed gold and silver, and your cash is next. So if you hold gold, silver, cash, have a 401k or a retirement portfolio, you need to be prepared for what's coming. And look, I know how that sounds. So let me put some real numbers on it, right? So gold is down 26% from its highs, and it's just closed its worst quarter in more than a decade, although it was up last week, which is nice to see. Silver's worse though. Silver is down 48% from its highs. It was at $121, now it's at $62. And the people behind all of this are delighted because it's going exactly to plan. Look, the way I see it, Trump is working down a list with 3 things on it, and 2 of those are already ticked off, gold and silver. The next thing is the dollar itself, which means your savings, your wages, the cash sat in your bank. And look, this is not a conspiracy theory, by the way. This is Trump's own words. So today I'm going to show you the order that he's going in, the timing, and at the end of it, I'm going to tell you exactly what I'm doing with my own money. Spoiler alert, I'm not selling a single ounce of gold or silver. So if that's all you care about, you could leave the video now, I guess. So anyway, if you don't know me, my name's Nick. I've been a professional investor and unprofessional trader for 25 years. None of this is financial advice, and this is not an inducement to buy or sell any assets. And as always, do not take financial advice from some random dude on YouTube. All right, so let's start with what's actually happening. So last week, Warsh stood up at a central banking conference in Portugal and aimed one line straight at the doubters. His exact words were, if there were people in households or the business sector or financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, well, I guess they're going to be disappointed or something like that. Anyway, so traders are now betting that the next move is going to be a rate hike in October. If you already watch this channel, you already know the mechanics of what that does to gold, but for those of you who are new, I'll explain it real quick. Higher rates mean that cash and bonds pay you to sit in them and wait. And gold pays you nothing. Gold doesn't pay you interest. So that leads to a stronger dollar. Now, a stronger dollar makes gold more expensive for everyone outside of America, so global demand for gold cools off. And then you've got this whole golden age of America story that Trump is pushing right now. The booming jobs, the AI money flooding in. Remember the booming jobs, by the way, because we're going to talk about that. But anyway, the booming jobs, the AI money flooding in, it tells everyone that the dollar is safe again, which leads to an even stronger dollar. And if the dollar is safe and it's strong, who needs insurance like gold? I mean, you know, I still hold gold, but that's what people generally think when they look at all this. But you need to do the maths and do it with me here, because this is where it gets really interesting. So the Fed's rate right now is 3.63%. Inflation in May was 4.2%, a 3-year high. So cash in the bank is still losing to inflation. It doesn't make sense to hold it. It doesn't make sense for the dollar to be strong, but gold is crashing anyway. So why is it crashing? What's driving the gold crash? Well, it's a story. That's all it really is. It's a story. And hold that for, because we're going to come back to it. But first I want to talk about silver a little bit, because I often forget to talk about silver. And silver's crash, it was brutal. Silver took nearly double the damage that gold did. And there's a number that shows this properly. It's called the gold to silver ratio. And that just means how many ounces of silver it takes to buy 1 ounce of gold. Now, at the peak of the silver run last year, it took about 46 ounces to buy 1 ounce of gold. Today, it's 67. So why does silver always bleed harder than gold? Well, there's a few reasons for this. And the first one hardly ever gets mentioned. So there are no central banks standing under silver. Central banks hold gold as a reserve asset, thousands of tons of it, and they keep buying more of it. But some of them do hold silver, by the way, but they don't hold as much silver, and the buying is not recorded like it is with gold. So when the anti-dollar money steps back, gold has official buyers waiting underneath it. And silver, it doesn't have anybody, or at least it doesn't appear to have anybody. Secondly, what am I talking about? Second, roughly half of silver demand is industrial. Solar panels, electric vehicles, electronics, a lot, right? So the moment the Fed starts talking about rate hikes, markets start pricing in an economic slowdown, and silver suddenly trades just like any other industrial metal, just like copper, for example. But gold doesn't really have that problem. Look, I'm starting to sound bearish on silver. I'm not. I'm just explaining the mechanics here. I hold a lot of silver. Third is the kind of spring mania from last year. That run that took silver to $121, it pulled in a huge crowd of leveraged tourists. And they've spent the last 2 months getting flushed out of the market, one margin call at a time. I've explained how these leverage cascades work in other videos, so I'm not going to go over it again. But just basically, I mean, you get a bunch of leverage margin calls, and that causes more margin calls, and then you get like a massive crash. Fourth, we need to talk about the fourth thing, the paper market. I mean, the exchanges that trade multiples of silver, more silver than exists on the planet, they trade, it's a COMEX, it's a big scam, you know it. Anyway, but look, this is the important bit. Everything that makes silver fall harder in a crash is still there on the way back up. So there's no central banks to sell and cap off the silver rally because none of them hold much silver. The industrial demand hasn't gone anywhere. We're in the 6th straight year of a structural supply deficit for silver. In China, who refines most of the world's silver, they started keeping all their silver at home in January, barely exporting any. Last time the dollar properly broke in the 1970s, gold went from $35 an ounce to $850 by 1980. Silver went from $1.40 to $49. So just do that maths, right? I'll do it for you, right? Gold did a 24x, silver did a 35x. And look, I'm not promising that it plays out like that again. Nobody knows exactly what the market does next, but I'm just saying that generally speaking, silver outpaces gold. So now the real question is, and that's what this whole video kind of hangs on, that's why I wanted to make this video. And you've probably already asked it yourself. Nick, if Trump spent years screaming for rate cuts and a cheaper dollar, why is his Fed chairman, Kevin Warsh, out there playing the inflation hawk and driving the dollar up? The papers say that this is a fight between Warsh and Trump. Warsh is the brave, independent guy standing up to the man who appointed him. He literally vowed there'd be no changes to the Fed's independence, no matter what the president says. And back when he was nominated, his critics warned that he would actually be a sock puppet for Trump. So is he not a sock puppet? Well, here's my read. The sock puppet crowd were probably right. I mean, they were just wrong about the timing. Because what does Trump actually want long term? He told us, and it's on camera, it's in his own words. He said that you make a hell of a lot more money with a weaker dollar than you do with a stronger dollar. And then he said something like, when you have a stronger dollar, you can't sell anything. It's only good for inflation. That's his words, not mine. But why does he want a weaker dollar though? Because the US has $40 trillion in debt. A weaker dollar juices exports and quietly shrinks the real weight of that $40 trillion in debt. It also pumps the markets, which, you know, Trump really likes. I mean, he always brags about how well the markets are doing under his reign. But here's the thing. A weak dollar means that imports cost more. It means that prices for a lot of stuff goes up. It means higher prices stick for longer. And the everyday cost of living just grinds higher and higher. While wages, they don't keep up. I mean, they never do, right? It also feeds into higher commodity prices, oil, food, metals. So you're paying more to fuel your car, heat your home, and just buy the basics. And keep that part in mind though, the higher commodity prices. We're going to come back to that because that's important for gold and silver holders. So the point is that a weaker dollar is going to make the economic pain Americans are feeling right now a lot worse. And honestly, around the world, it's going to make things a lot worse. So Trump just can't push a button today and weaken the dollar with the midterms coming up. For now, they need a stronger dollar, which makes gold and silver weaker. But Trump can flip that switch whenever it suits him, whenever he wants. And unlike most theories that you're hearing on YouTube, this one comes with a date attached, the midterm elections. They're going to be on November 3rd. Until that vote, Trump needs exactly what Warsh is delivering right now. Inflation talk down, dollar strong, stocks up, everyone feeling like the golden age is here, or at least stocks stable. Let's not say up, stocks are stable-ish, right? And the last Fed meeting before the midterms is on October 28th. And guess where traders think the next rate hike is going to land? October 28th. So that exact meeting. And after that, this thing is probably going to go one of two ways. So option A, Warsh means every word of what he's been saying right now. He holds rates high through to 2027 like a proper inflation hawk. Inflation dies and the budget dies with it. The US government is paying over $1 trillion a year in interest on its debt, more than it spends on defense, right? And that's a big problem for America. It's a massive problem. So anyway, option B, he plays the hard man until the votes are counted. Then he declares victory on inflation and starts cutting into 2027. The dollar slides, the debt shrinks in real terms, and Trump finally gets the boom that he wants. Which one do you think Trump's appointee, Kevin Warsh, is going to pick? Let me know in the comments. I'm genuinely interested. What do you guys think? And look, the thing is, the cracks are starting to show already. I mean, last week's job report came in at 57,000. That $172,000 blowout from the last jobs report, and that's what is powering this whole golden age story, has been revised down to 129,000. They always do that. They give you a high number, and then they revise it down when no one's looking. It's very sneaky. Days after the hawk speech from Kevin Warsh, he was already starting to soften. He said, and I quote, "Inflation risks have come down." The dollar actually dropped while he was speaking. But this is starting to sound like a conspiracy theory. So if a government deliberately crushing gold to protect its currency sounds a little bit tinfoil hat to you, let me show you what Britain and America actually did in the 1960s, and then after that too. But let's start with the 1960s because it's a very good story. So November 1967, Britain is broke. The pound is getting absolutely hammered. And the Bank of England burns through 200 million pounds of reserves in a single day, just holding the line. So on Saturday, the 18th, the Prime Minister, Harold Wilson, devalues the pound by 14%. He actually just devalues the pound. And the next day, he goes on television and tells the country, his exact words, "It does not mean, of course, that the pound here in Britain, in your pocket or your purse or in your bank has been devalued." I mean, he devalued it, and then he said, "It doesn't mean it's been devalued." I hate politicians so much. Anyway, I get angry every time I listen to this story because, you know, he was screwing with people's savings and the sheer audacity of governments. This is why I always say I do not support any politician. I do not like any politician. Government is the enemy of the people, in my opinion. But anyway, yeah, 1967. The smart money heard that speech and it did the obvious thing. It ran to gold, and it ran hard to gold. And that run exposed something much bigger that was going on with gold. So since 1961, 8 central banks, with America covering half of the bill, had been running an open cartel called the London Gold Pool. It had one job, not two, one job. It was to dump gold onto the London market every time the price got above $35. So the dollar always looked rock solid in comparison to gold. Official coordinated gold price suppression by central banks, right? If you say that out loud today, you get called a conspiracy theorist. But back then, it was literally just policy. This is recorded history, guys. After Wilson's speech, the whole thing broke, right? America was flying gold across the Atlantic by the plane load just to keep price pinned down. So much metal moved through the Bank of England, by the way, that the floor of the weighing room, it gave out. And that's not an exaggeration, it's true. The actual floor gave out because there was so much gold being pushed through there. So by March of 1968, it was over. The London gold market had to shut its doors for 2 weeks, the cartel dissolved, and within 4 months of Wilson's little TV performance, the whole suppression machine was dead. 7 years of official price suppression on gold, and all it brought was a delay and a more violent repricing at the end of it. 3 years later, Nixon cut the dollar loose from gold entirely, and you know what gold did after that. It flew for the next decade. It was absolutely crazy. And this sort of manipulation of gold to protect the dollar, that wasn't the only time they did it. They've been doing this forever. In 1933, they banned private gold outright, then they devalued the dollar 41% the following year. In 1985, they didn't even bother hiding it. 5 finance ministers crushed the dollar on purpose from a New York hotel ballroom. It was called the Plaza Accord. Look it up, right? So the order never changes. Gold gets dealt with first, silver gets dealt with first, and then they deal with the dollar. But you want some proof, yeah? Right? I hear you. I'd want proof too. So central banks all over the world, while the dollar is supposedly making this amazing comeback in 2026 and gold is dying, what are they doing? You're dumping dollars and buying gold, still, in record amounts. They bought another 244 tons of gold in the first 3 months of 2026. They don't believe the dollar comeback is real. Neither should you, neither should anyone. Meanwhile, retail is pulling money out of gold ETFs to chase the AI stocks, the SpaceXs, and all that crap. So you got the people who actually print money, central banks choosing metal over fiat currency, while retail traders are choosing crappy stocks. And you know who always ends up losing this bet, right? Retail traders. They get wiped out every single time. But now let me critique my own breakdown of this, right? Because you know, if it's got holes, you deserve to know them. So maybe Warsh means it, by the way. Maybe he really is the second coming of Paul Volcker, which was a Fed chairman back in the 80s. And he holds rates up for years. Midterms be damned, he just keeps pumping the interest rate. If that's true, metals stay dead. They stayed dead for a long time. The 2011 squeeze took 4 years to play out, and I can't promise that this one's shorter. If the Middle East flares up again, inflation rips higher, the hikes get real, and this dip gets a lot deeper before anything I've described even starts showing up. And you got to appreciate that the world is a complex place. You know, you could have a theory, but you know, a war pops off somewhere and your theory goes out the window. Now you have to adapt, and that's called adapting to current market conditions, right? And my timing could simply be wrong. I mean, after the midterms, it's just me reading the incentives. Nobody has sent me a memo. Trump hasn't just phoned me up and said, hey, you know what, we're going to pump gold and silver after the midterms and we're going to crash the dollar. I mean, you know, the point is, do your own research. But the big question is, what am I doing with my own metals? I'm not selling a single ounce. I mean, I said that at the start. The entire point of holding metal is for moments exactly exactly like this one. I've been sitting cashed up for months, and this crash is the reason why. I'm using the weakness to slowly add to my metal pile, and I do mean slowly. A bit of gold, a bit of silver, the boring metals that the grid can't run with, copper and uranium, plus my usual defensive stocks I almost always talk about. Building positions over months in tranches at prices that I like when I consider the asset is cheap. If it falls further, fine, I'm just going to keep adding it. And I'm patient because sequences like this, they play out over months, not days. And nobody needs to do anything drastic today. And also, you need to appreciate that your timing could be wrong. So that's why you buy in little bits and pieces and you build a position over a long time. If it goes lower, you just appreciate that you're getting a cheaper price and you could buy lower. So that's a trader's eyes here. Gold is crossed off the list, silver is crossed off the list. The third thing they're coming for is cash, the dollar. And naturally, when they come for the dollar, when the dollar gets weaker, gold and silver go back up. So I'm looking forward to that. I'll see you in the next one.